Your brand new iPhone deserves the best protection, and the iLune 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin. I'm your host today. Imagine a company that's done everything wrong in traditional finance, only to reinvent itself as Europe's first Bitcoin Treasury Company, the Blockchain Group. That's right, folks. We're talking about a full reset in 2023 when this tech holding company decided to pivot and adopt a long-term strategy to accumulate Bitcoin. But how did they do it? Well, let's take a closer look at their remarkable journey. In the US, strategy proved the Bitcoin Treasury model, while in Asia, Metaplanet took the baton. Now, in Europe, the Blockchain Group has emerged as a leader in balance sheet transformation. The company went public on Euronext Growth Paris and delivered one of the most impressive performances among all public Bitcoin companies since adopting its treasury strategy. In just 6 months, it's posted a staggering 709.8% BTC Yield, far outpacing Bitcoin's price performance. This isn't about riding Bitcoin's price action. It's about manufacturing Bitcoin per share through disciplined capital strategy. The Blockchain Group wasn't always a Bitcoin-first company. Until late 2023, they were a diversified tech holding company with interests across media, consulting, and software services. But things changed when a new board was installed, legacy subsidiaries were spun off or liquidated, and the company emerged as a leaner, more focused entity anchored by 2 profitable operating companies. But what really turned it all around was the shift in philosophy, treating Bitcoin not as a speculative asset, but as core working capital in a digitally scarce economy. And that's exactly what the Blockchain Group did, adopting a masterclass in capital efficiency. They didn't just buy Bitcoin, they refined their balance sheet into a Satoshi generation engine. These weren't random capital injections. They were highly targeted refinements designed to maximize the amount of Bitcoin acquired per share created. In Q1 2025 alone, fully diluted shares increased by 100%, but BTC holdings grew by 1,450%. The result? A 709.8% BTC yield. Now, this rise isn't an accident. It's the product of a deliberate multi-instrument capital strategy modeled after Strategy's Bitcoin Refinery playbook. These tools allow the Blockchain Group to source capital from multiple channels while retaining one goal: maximizing BTC per share over time. Their investors seem confident too, backing a company that's taking bold steps towards expansion and growth. To fund that growth, they plan to expand their capital raising capacity from €300 this year to over €100 by the early 2030s. If Bitcoin reaches €2 million per BTC, as projected, the Blockchain Group's BTC holdings could represent a €210 for 20 billion NAV, positioning it to become Europe's most valuable public company. This isn't just about moonshot projections. These are mathematical extrapolations based on a capital model already proving itself. So, what does this mean for European CFOs and capital allocators? Bitcoin is not a speculative hedge. It's a superior capital foundation. And for companies willing to measure success in BTC share, not just euros earned, the upside is exponential. The Blockchain Group isn't just holding Bitcoin, they're optimizing for it. And in doing so, they're reshaping what shareholder value can look like in a world of finite money. That's the story behind the Blockchain Group's remarkable rise to becoming Europe's first Bitcoin Treasury Company.